everyone, and welcome to our Forex session. Those of you who come along regularly will know we have been absent for a little while, and there's been a very good reason for that. In case you don't know, David and I have been working very, very hard to complete our stock trading and investing program, which is now finished, yay, and ready to roll. And I suspect David will tell you a little bit about that later on in the session. But for the time being, I just want to focus back on Forex. But before we start and get onto the charts and see what's happening, what has been happening, and what is, much more importantly, what is likely to happen later on in today's session, can I draw your attention to the disclaimer that I know you can see on your screen? As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. As always, it'll be a two-hander. It'll be myself and David. I'm actually going to start this one. I'm going to be looking at the some pairs, but the platform I'm going to be using is primarily MT4. I think David's got NinjaTrader and TradingView. I might hop over to TradingView for one particular instrument that I want to just bring your attention to. If you've got any questions about anything we say, or you're not clear about what we say, please just drop them into the chat box. And if you remember a question after the session has finished, then you're always welcome to send us an email either to myself, Anna at annacooling.com, or David, and David is obviously at Quantum, David at quantumtrading.com. Again, for those of you who come regularly will know we look at the markets through the prism of volume price analysis. We use our quantum indicators, and we also look beyond just the technical picture of the chart, because those of you who have been following us for some time and have maybe some of my books that are available on Amazon, we know that we take what we call a three-dimensional approach to the markets. It's like a cross-market analysis to give us that extra bit of information as to what may be driving the currencies and the currency pairs. And but all I would say is that when we start as traders, we all start with the chart. We all start maybe with just one time frame. Here we don't. We look at multiple time frames. So I'm going to give you some examples of how you can use multiple time frames. But whatever we do, it's all underpinned with volume price analysis. Volume price analysis is that very, very important relationship between the price action and the volume. And by volume, we mean activity. In the Forex market, as you know, is decentralized. There is no central exchange. So what we use is tick volume. Often asked this question, is it as reliable as the volume that you say you have on stocks? And it is pretty good. It is never going to be 100% because, as I said, there's no central exchange, but there have been plenty of studies to show that the activity, the volume bars as represented through tick are good enough. I mean, I think the percentage is something almost to 90%. That's not my figures. It's someone who runs a very prestigious hedge fund, and that's all he uses. And if it's good enough for him, it's good enough for me. The only thing I would say is that when you are choosing your broker, always go for a broker that offers a good quality feed. And by that, I mean he's taking the data from as many of the liquidity providers that are out there. The 100forexbrokers.com used to give a list or breakdown of brokers and who they got their feed from. But for some reason, the site has changed. It's changed its name. So if anybody here can come across that kind of information, I'd be really grateful to receive it. But I have Think Markets. All the I think there's Pepperstone. There's lots of brokers out there, and as I said, they do have very, very good quality feeds, and they take their data from as many of the big players in this market. I just wanted to reiterate that also because, as I said, I do have not a lot of emails, but I'm asked fairly regularly what I think about why are we using tick data, tick volume and not actual volume. And that's the reason for it. I'm just going to move my little go to webinar icon out of the way. I know you can't see it, but it blocks the chart for me. Now, obviously, we've been away for some time. All sorts of things have been happening. I'm not going to reiterate them one by one. I suppose one of the most significant has been the downgrade for the US. This came completely out of the blue. It really hasn't had a massive effect so far on the US dollar. In fact, if we look at the daily chart for the US dollar, as we can see here, I'm just using the daily chart, it's been in a bit of a run up. It's had a very nice rally after this fall here. We've got a bit of consolidation here. We've got a very nice hammer candle here, and it's been going up and up. Now, in the last 1, 2, 3, 4, 5, 6, 7 sessions, it's now moving sideways. And from the perspective of purely price action, when you have such a reversal, and we're now moving into sideways, and it's actually banded by some pretty significant levels. These levels are given to us by our Camarilla indicator, which we have here. I'll just expand it, which is the R3 and the S3 here, of the levels that are available on Camarilla. I think I would suggest the third and the fourth are most significant. And you have this sideways movement. While it's in this sideways movement, depending on the range of the candles and what happens across the sessions, you may find, for example, if you end up with a candle like this, what has happened in the 3 sessions for Forex is it can be very choppy. So looking at a daily chart to see what the structure of the price action is can give you a pretty good clue of what you can expect in the faster timeframes. But the dollar overall moving sideways, albeit in a fairly healthy range, as it was. So there's going to be plenty of opportunities on an intraday basis. We are still waiting to know whether that's going to go higher or whether it is actually going to reverse after this consolidation phase. And the levels are very clearly marked for us. Now, yesterday was a very interesting day, because if we look at yesterday's candle, it's ended with a deep wick to the top of the candle. But what that is telling us, obviously, at some point, the dollar rose quite strongly. It actually broke out of this consolidation, got to, as I said, this second most important level on the Camarilla, which is the R4, but later on it retreated, and now today it has come back again. With regards to the dollar, those of you who come along regularly and follow my posts on either on Facebook or on my site will know there are a number of drivers of the US dollar, and one of them is the bond yields. Bonds are very much at the center of the whole market and economic narrative, and it's something that we cover in great detail in our program. This is what I mean by this 3-dimensional approach, this cross-market approach, this cross-market analysis that we have to do, or at least be aware of, even when you first start. As I said, when you first start, we will start with one chart. We start maybe with one pair. We start with some indicators. We soon become aware that obviously, currencies are driven by local news, but then we have the macro picture, of which bonds is one element. And the quickest way to go and see what the bond market is up to is to hop over onto investing.com, and they very helpfully give us the yield, because that's what we are interested in at the moment. It's on the 10, the 30, the 5, the 5-year, and we've also got the 3 months. There are all sorts of durations. The one that the market is really not fixated upon, but the one that is used to assess risk, if you like, is the 10-year. And what happens is, when the yield is rising, the dollar will go up. We have had occasions when that doesn't happen, but the general rule of thumb is when yields are rising, so will the US dollar. And what we see here is we see something that is not normal for bond yields. You will have heard of the yield curve being inverted. Now, what that means is when your longer dated bonds, or the yield on those, is higher than the shorter ones. Now, this is the 3 month. There's also a 1 month. And you can see here the 3 months at the moment, if you were to buy a 3 month treasury bill, you would be given 5.472% as your yield, as your return on that. If you buy a 30-year bond, you get less. Now, from the perspective of risk, that's not right, because if you are, in effect, when you're buying a bond, you're lending money to the entity. It could be a government, or it could be a corporate bond to a company. So if you're going to lend money to someone over a longer period of time, there is more risk. So you would expect to be rewarded for taking on that higher risk. And at the moment, that is not what we are seeing. When it uninverts, as it were, if there is such a word, the fear is that we will actually be going into some kind of recession, which is another part of the market narrative. It's the recession. It seems to be sort of be kicked down the road like a can at the moment. Now, bond yields, as the bond yield goes up, the value of the bond goes down. They have an inverse relationship. And one of the things, I suppose, one of the not revelations that David and I had a few years ago, this is when we were putting the Forex program together, because we were always aware of the bond market, but it can be very, very confusing. And I have to say, I've written many times that as soon as you mention the bond market to most traders and investors, sometimes their eyes glaze over, because it can seem so complicated, and I don't really think this has nothing to do with me. But trust me, it does, because bonds is the cost of money. They dictate everything that goes on in our life, in terms of mortgages, in terms of credit card, in terms of borrowings. So why would you not want to know what the bond market is up to? And as I said, it does have a direct relationship with currencies as well, not just the dollar. When bond yields go up substantially, currencies will strengthen. Now, yesterday, as I said, let's ignore this comeback of the dollar, and that's because the bond yields have gone up again. They've gone back over 4%. Looking at the investing.com page, I suspect if they start to fall and they go back below the 4%, then you will see a major movement in the dollar. Now, yesterday we had, I just have to bring up Forex Factory, because this is where you get this confluence of fundamental news, things that are going on in related markets, and that's how sentiment can switch, as it were. And when you get this confluence, it's like a domino effect. It'll start in one market and then it'll ripple through. Now, this is yesterday's economic calendar, and we had the flash PMIs, and all the numbers were all coming in below expectation. And that had an effect on the bond yields going down, because it doesn't mean inflation has gone, but when you have the services PMI and manufacturing PMI numbers coming in this below, and 50 is the kind of inflection point, it doesn't augur well for the future. And what we could be looking at now is stagflation. Yes, which is the worst of all worlds. You're still going to get inflation, but you haven't got any growth. And that's really not good for anyone. And the way we're going to get out of this problem, obviously sort out the energy issue, the energy costs, which has been a huge driver of inflation, but we have to grow the economies again. And if they're not going to grow, and inflation stays there, we are in a lot of trouble. So the combination of these numbers of the bond yield. The bond yields then pulled back, really kind of did for the dollar. Now, how that translated into the sessions, as it were, because the other thing we have to remember with Forex is, although this is obviously a 24-hour market, it's very much 3 individual sessions. And one of the reasons we've done this webinar at this time is because we're coming out of London and Wall Street hasn't opened, but the Forex bit of New York actually starts about, is it 1 o'clock, David? I think it's about, normally says about 1 o'clock. There's some debate as to whether it's 12:30, 1 o'clock, 1:30. So we're in what we call this crossover period. So if you like to trade the London European session, it's something you have to be aware of. So if you're in a really nice trade, and the one I wanted to highlight is the one that I've written about on my Facebook page, which is under my name, and then I think it's called Learn Forex Trading, because it was a really nice example of how this sentiment can switch. As I said, in the morning, the dollar was moving up very strongly. We could see it was breaking out of that from the R3, and it actually went all the way up to the R4. Obviously, that's going to be reflected in the majors, and cable is a great one for producing some really nice trends. Aussie dollar, that they're all they're solid currency pairs. They also have a bias, if you like, in the sense that if you're going to be in London Europe session, you'll find some nice moves maybe in cable, whereas dollar CAD tends to move more strongly once North America gets under the way, because you've got Canadian traders joining the market. So this is, as I said, that the fall came in after the London Open, once the usual traps had ended, and confirmed by the break lower. And it was actually, again, levels tell you where prices are going, where prices are likely to stall, and where perhaps they can reverse. And there's a hierarchy to levels. If you use Fibonacci, there's a hierarchy within Fibonacci. If you use Camarilla, there's a hierarchy in Camarilla. Support and resistance levels that you mark on by hand, the more a price touches but doesn't go through, it becomes stronger. Those of you who have the quantum indicators will know we have some very specialist indicators to give us a visual picture, so we don't have to keep drawing lines on our chart. So we know, is it a strong level or is it a weaker level? And this is an example of the move lower in the Renko chart. On MT4, I think this is one of the best Renko indicator that is available on MT4 platform. I don't think anyone else has done it. And what Renko does, it takes away the noise, if you like, of the candles. Candles will have wicks on them, and when you do get into a move such as this, as I said, the break was, you can see here, it touched it, it actually broke through it, and you think, and that's the London session. Oh, great. So many traders get trapped at the London session and at these other crossover periods. Oh, yeah, it looked as though it was going higher. Yeah, it's going to, and then suddenly, bang, it goes lower. But because it happens around a significant levels, and obviously we look at candles and we look at volume at the same time, we can see that and we think, yeah, wait. And in fact, the second time it did carry on lower. What the Renko also does, it helps to absorb those pullbacks. Now, I mean, pullbacks, once a trend is underway, we can judge whether it's genuine or not by using our VPA, because we want to see volume on the way down. When we see a pullback or a correction like this, what we don't want to see is we don't want to see the volume rising, because then we know that could be a genuine reversal. But to determine whether this is just a pullback, we look at the time chart, obviously, with the volume. We see the candles, the up candles, but is it supported by volume? If it's not supported by volume, it's an anomaly, and the chances are the move will continue on. Now, this, because this was mid-morning, that's, it's often a good place to either, if you've missed the first part of the move, to enter. You could, as here, once it breaks through the low of this of the first part of the trend, and in fact it occurred at an S2 from a hierarchical perspective, not a hugely significant camarilla, but it plays its part as well, and the move carried on lower. What I would also say is if you saw this kind of price action in the middle of the London session and there's no other news and all things being equal, the chances are it would carry on. But if you see it around a crossover or very close to a crossover, just take a step back and think, let me see what's going to happen, because that's a great time when, as I said, the market makers can step in and trick you, if you like, to taking a position. And sometimes you think for no reason at all. It's simply you're in the wrong place at the wrong time, as it were. And it went on lower. The trend dots kept everything nice and red. They're at the top of the bricks, and of course the trend monitor was absolutely bright red. But as you can see here, you've got how the Renko keeps you in. We've got that little pullback there. We actually hit the S6, which is the last camarilla, bounced off it, broke through again. But you can see this pullback all the time, and you think, yeah, that is also an indication that this move is possibly coming to an end. It's coming to an exhaustion point, because everything comes to an exhaustion point. And we were also coming up to the US Open. And in fact, we did get a reversal of cable, reflecting that change of sentiment towards the dollar that we saw on the dollar index. Now, the other thing is, how is that represented on the time charts? And the reason I've taken screenshots. I use them on my post, but to try and do this on the chart, it's almost impossible because there's so many candles since yesterday. That is by the way, just in case you're wondering, that was a break in my internet. There was some sort of problem with the internet, which is why I got that. But that was just a normal downtrend. And this is what I mean by the little pullbacks here. And this is that area that we had on the Renko. Now, what's also interesting on the time chart, that it was around the volume point of control, another hugely important indicator for us. And it's where there is no firm direction. We're coming up to a session crossover. We're going into sideways price action. It's around the volume point of control. We've had a really nice trend lower, and the market it's in this indecisive phase, if you like. We can see the dollar is pulling back, if you like. So which of the majors is actually going to reverse? Because they don't always. Cable could have quite easily just continued on and maybe made a move at the London fix. But in fact, we do get it eventually. The selling of the dollar was quite strong, and off we go again off the volume point of control, and we got the break higher. And if we go back to the Renko, how that is expressed here, we can see here, and from an entry perspective, how you use this combination of indicators and confluence of signals, because that's what we're talking about. Confluence of signals from a Renko and a time chart is, well, first of all, it very much depends on you and how I think I said in my post, it's what type of trader you are. Some traders are much more aggressive, and they're much happier to go in early, if you like, to maybe capture more of the reversal. We can see here that reversal point here. Well, that's still red, although these are blue. The trend monitor is still red. The trend monitor doesn't. That's the last to change. It's a little bit. It doesn't change as quickly as the trend dot. You may think, no, I'm, and it's off a support line as well. You think, okay, well, I'll wait till they all turn blue, and then what happens is you go straight into the S6. Now we know the S6 is not. It's the last one. You do get a little pullback, and you can see that the trend monitor reflects that as well. So you could say, if you weren't so aggressive, you could say, well, I'll wait until it breaks back above there, and I will see what happens. Now, yeah, you've missed that bunch, but you've still got that. you're still going to get the pullbacks on the way back up, but that is inevitable. The trend monitor stays bright blue. So cable yesterday was a really, really good example of some great, what one of our trader friends who used to be at Liffey says, some great two-way price action. And it's even better when it happens in one session and then it changes completely in the next session. And I'm just going to highlight, because I want to pass over to David, is in fact we've kind of seen a bit of the same thing. This is the Aussie dollar. In fact, we haven't seen a two-way, because I was thinking maybe this would, we would see a similar sort of pattern that we saw with cable yesterday. Again, starting with Renko. Now with Renko as well, you can look at chart patterns in terms of, this is 1, 2. This is almost it's a double top there, and it's a triple top there. And again, we're at one of these camarillas, and everything lines up with the trend monitor and the trend dot. Again, we get to an S3. What happens? We have a little pause, which is almost inevitable. It's quite unusual not to stop at these significant support and resistance levels. Moves a little bit sideways, and it's actually carried on lower. The other thing with levels is, well, okay, it's going to carry on lower. Well, where's it going to? This morning, my first target, if you like, was actually the S4, which it almost got to, and then it reversed. And that kind of made me think, well, maybe we're going to see the same thing as we saw with cable. It's going to go sideways and then maybe reverse higher as the dollar is going to fall back. But then having looked at the bond yields, I'm thinking, maybe that's not the case. And in fact, it's come back to the S4 and carried on lower. The beauty of the trend monitor is that it stays red. It hasn't moved. So in a way, it kind of gives you more confidence. By all means, this will tell us what is likely to happen next, which is what we want to know. And then what the indicator does is just help us to keep us in as it were. If we look at the time chart, as I said, I tend to use the 5-minute chart, but you can use the Renko even with the hourly chart if you like to trade, slower time frames. Now, this is very interesting because we are at this crossover and we're actually seeing a lot of volume coming in. So maybe, and also if you remember, the dollar is at the top end of that range on the S3. It is in this sideways. So maybe I was expecting it more here. Sorry, more here, and in fact, it's come through a little bit of an overextension. So maybe we are going to get a repeat of what we saw on cable yesterday. So as in, just to pull it all together, really, we use multiple time frames. I know a Renko is not time, but it is a chart that can help us with entries, exits, and more importantly, keeping us in. The hourly chart, if I just pull that up here, the hourly chart is brilliant for additional support and resistance levels. The support and resistance levels on slower time frames carry a lot more weight. The Camarilla on the hourly chart, these levels here are weekly. They only change once a week. The daily ones change, obviously, every day. So all the time frames up to, but not including the hour, those levels will change once the session kicks over. These are weekly. So in fact, we've had this, we've tested it 1, 2, 3, and down it goes. We're at the R3. If this is going to go lower, where's it going to go? Well, the obvious target is back to the volume point of control. So you've had a really nice move up, then a move down, but obviously on an hourly time frame. So it's a very nice move higher. And like all price action, which is fractal, you will see this pattern repeated on a 1 minute, 3 minute, 5 minute, any chart. And obviously, it's going to take longer depending on the time frame itself. Right, that's what I was going to say. Don't think there's much happening in terms of news. The big news is tomorrow. Jackson Hole is happening. We've had the unemployment claims came in just under forecast, which is actually not terribly good news for the reduction of interest rates, because most central banks are waiting for the employment market to pretty much crater. Because if you have a strong labour market, you have wage inflation, and it's kind of you've got a kind of feedback loop. Tomorrow is really the day, because you will find he speaks at 3:00. But what tends to happen is that there are reporters milling around Jackson Hole, and there are people making comments. So you have to be kind of aware of what's going on. We've got the IFO, and we've got the revised UOM. I'm just going to pass over to David. There is another session this evening where we're going to talk about the stock program and also look at the stock market in more details. I haven't gone into stocks too much in what I want to say. I want to save that for this evening, but obviously a falling dollar is positive for stocks, and obviously Nvidia rode to the rescue yesterday, and everything was happy. Was it lollipops and roses in the garden? So I'm going to pass over to David. As I said, if you've got any questions, just please put them in the chat box.
Hi everybody, good to see you all, and I'd say welcome back. We've been away for a very long time, and as Anna said, it's been largely involved around the stock trading and investing program, which is almost complete, but there is still a lot of work to do on the back end of stuff that doesn't get much exposure. You tend to think about it in terms of content, but we have to do all the back end in terms of delivery, in terms of support pages for new indicators, which I've got here, and just making sure that everything works properly. So you will have to bear with us for a little bit longer. Part of what we've done, hopefully you can hear me okay. We've changed completely. We've gone away from, we used to use headsets for these webinars, but listening to the recordings, we get a lot of clicks and it's not great listening. Although the quality is fine, it's the clicking, which is down to jack plugs and all sorts of things. So we've actually gone to a standard microphone set up like a studio, which is hopefully loud and clear without all the clicks. In addition to all the content that we've developed for the program, we started that on the 1st of January last year. So it's taken us nearly 2 years to put the program together. But in amongst that, we've also developed a whole new raft of volume-based indicators. And they've obviously come out of the stock trading program. But what I wanted to show you here today is just to give you an insight into them and actually show you them working on Forex charts in precisely the same way as they work on stocks, indices, futures, commodities, whatever it may be. So they work in exactly the same way. As of today, we've developed them both for NinjaTrader and for TradingView. They will not be available until we roll out the education program. So I'm afraid you're just going to have to wait for them. But I just wanted to give you a sneak look at them today. And they're all pretty much volume-based, again, which comes out of building on the volume price analysis methodology. The one you're looking at here, and I've got it in multiple time frames from 1 minute right the way through down to the bottom right on the daily, is an indicator called the volume relative strength indicator. I'm not going to go through all the time frames, but I will just pull up one. And part of rolling these out, of course, is I have recorded a whole load of videos around them to explain how they work, the methodology, how to use them, how to apply them, and obviously everything that goes along with that. In a nutshell, and of course, you would use this indicator in combination with a volume-based chart below. So we're on 30-minute here, and you'd have the 30-minute traditional volume below, the tick activity, tick volume. But I'm just showing it to you in isolation to make it clear. The indicator has 3 key elements, if you like. The first is this fulcrum line, if you like, the fulcrum point of where the chart moves from bullish to bearish and back to bullish again. So that's the first obvious intuitive area that you would look at. The second thing that we've done with this, and as I say, this is all about volume. This is a purely volume-based indicator based on relative volume. The second thing we've done here is to color code everything. And where you have the brighter colors, so the brighter blue and the brighter yellow, the brighter blue is signifying heavily bearish. The brighter yellow, beg your pardon, is signifying heavily bullish. And then you have the weaker colors. So we've got this weaker sort of sea green color and the camel colored here, if you like. They are signifying weakness starting to develop. So in many ways, it's like the trend monitor. For those of you familiar with the trend monitor, you've got 4 color sequences there. We go bright to dark, dark to bright. So we go bright blue, dark red, bright red, typically in a sequence. This is very similar in that concept that you have brighter colors for strength and less bright colors where perhaps that strength is waning somewhat. So that's the second element to it. The third element to it is the height of those bars. And where you get very tall bars, as you can see, that is essentially telling you that this is a strong move. And where you get less tall bars, it's telling you that this is a less strong move, a weaker move, in other words. So you've got those 3 constant elements to consider all the time. And what we're constantly looking at, and I've gone on to the 30-minute here because it does describe this rather well. Where we get the price for waterfall, we get an injection of bearish momentum here. We change into our brighter colors here. It's really telling us this is a very strong move. Now, once we start to slow down, as we come to the bottom of the curve here, the height of these bars, it is declining, but it's not declining that fast. But nevertheless, it is declining. So it's telling us at this point is that, yes, that bearish sentiment is starting to diminish somewhat. It's starting to drain away a little bit. And of course, you would be looking at this in combination with a volume-based chart, and you would be seeing volume under these candles, and this will be telling you almost certainly loud and clear that the volume here is coming to a buying point because you're seeing compressed candles, you're seeing a narrowing of spreads, so the pressure is being absorbed. In other words, we're seeing buying coming into the market. And this gradual falling away in the height of those bars would be mirroring what you are seeing in terms of a volume price analysis methodology perspective. And the beauty of this indicator is that many of the analytical techniques that we use for volume price analysis in terms of, and by that I mean looking at the height of things or the height of things against other bars where we're benchmarking, for example, where we see volume falling away, where we see pressure in this case, where we see the relative volume falling away. Those analytical methodologies are very similar, which makes it a perfect combination, and it's an add-on. It's a development of our volume price analysis methodology, and the reason we developed it is to peel back the layers of volume price analysis to a layer that is behind, if you like, to look at this relative volume aspect, and from that to really give us more confidence in holding a position in a trend, because that's what it comes down to at the end of the day. The hardest thing to do in trading, in investing, it doesn't matter what you're doing, is once you've got a position in the market, is to really maintain that position and maximize any profitability. And one of the questions I think earlier on was about the psychology of trading. And the psychology of trading is really that. It is managing your emotions. It's being able to stay in and maximize any profitability that you can. And the reason it's so important, I've explained this before in other videos and other webinars, but it is important because if you look at people say, well, can I be successful if I take 10 trades and if I get 8 winners, then I'm going to be successful? Well, not necessarily, because it depends on how big those winners are. If those winners are very, very tiny and your 2 losses are quite large, or in context are large, then it flies in the face of making money. You can be successful having 8 losses and 2 winners, provided those 2 winners more than counterbalance the 8 small losses. So if you're using a stop loss, which you should be, then those 8 losses will be relatively small. But it's the 2 big winners that are going to move your account forward. So you can literally, you can have 7 losses, 3 winners, and still be successful, provided that you're able to maintain a position in a trend once that trend is underway and you've got some money in it and you're not flicked out at the first reversal. And that's the problem that we all have. We all suffer it. I can assure you it's exactly the same for us. You have money on the table, you mentally bank it, the market starts to pause, it goes into congestion maybe, then starts to reverse a little bit, and you think, should I take my money off the table here? Should I cut back this position, etc., etc.? It's fatal, because what often happens is precisely what happened here. You can imagine this: bang, down we go, and then we get the reversal coming in, and these traders who got in here will have made some money for sure, but they'll be looking at this and thinking, oh my gosh, I better get out because I don't want to lose my profit. And then they sit looking at that, and that is horrible. It's absolutely horrid to look at that, and you start adding up how much money you would have made and you didn't. So we've always got that in the back of our minds when we're developing indicators. Not only is there the fundamental concept of this indicator, which I hope I've got across to you the main points, but also the nuance aspect to helping you stay in a trend once it is underway. So let's just pop that down, and that's moving along quite nicely. And as you can see, it works on all time frames. It doesn't matter what time frame you're on, right out to the dailies, the weeklies, whatever. But the concepts here are identical. You can see here as we come out of this, we had a bearish phase here, we come out of it, we weaken, we move up to the fulcrum, we start to see maybe a little bit of bullish price action coming in. We're flip-flopping around, so it's really not developing any strength at that point. Then we get a rising of the bars themselves, plus they've changed color to a bright color, so we know we've got an injection here of some sustainability, if you like. A little bit of a fallback here, but we don't go back down to the fulcrum. We just drop back and change color. Then it picks up the tone again, and we rise again. And this is where we really start to see it. We drop down very quickly, changing color, and down to the fulcrum point here. And even though we get a little bit of a rally here, it's so weak, and it's weak because the bars themselves are not tall. They are just not telling. They're telling us that there is really, yes, okay, there's a bit of bullish sentiment there, but it's really nothing to worry about too much. And then we start to reverse, and then we get into this. And this is what I really mean about talking how the volume price analysis methodology mirrors the VRSI indicator, because you've got rising, we'll call it volume, but it's rising pressure, it's rising momentum, it's strength basically, and these are all nice bright blue marching lower. And then we get to the end of it and we start to see a slight weakening of that. But it's interesting here that we haven't gone back to the fulcrum, we're flattening, and we've gone down quite a long way, but we are flattening here. And the other aspect of this is when the pressure bars maintain their height. So when they maintain a height, that's always a good sign, because it means they're not reducing back to here or coming back this way. So that's the VRSI indicator. As I say, it's available. It will be available on TradingView. We've developed it for TradingView, and it's available for NinjaTrader when we roll out the whole thing together with the stock trading program. At that point, we will then look at doing, or maybe just before that, we will look at TradeStation, but probably just after, and then ultimately onto MT4, MT5 as well. I choose my words carefully, because on some platforms, it's not possible to develop the indicators we want to develop because the coding script doesn't give us the flexibility. But TradeStation won't be an issue, I'm sure. MT45 could give us some issues, but we will see in due course. And if you have the full program, a full set of indicators, rather, beg your pardon, if you've purchased from us in the past, the full set, that's the full package for whichever platform, you will get these indicators, as we've always done in the past, free of charge. I also say that I'll tell you that the price of those full packages is going up, because the number of indicators we're rolling out, we couldn't justify keeping the price where it's been for the last 11, 12 years. So the prices will be going up. This is the next indicator that we've developed for the program, which is, I call it the VWAP, but actually it's 5 indicators in one. We just hop down onto one of these, and there we go. We're on the 15-minute time frame here. If you're not familiar with the terminology VWAP, it means volume weighted average price. And once again, it is looking at the volume profile and weighting that according to the price perspective. So what you're seeing here in the center is the VWAP itself, which is the red line. And these two outer lines, the upper envelope and the lower envelope, are 1 standard deviation away. And typically what you will see is that when prices move below the VWAP, then it becomes very bearish. And when they move above the VWAP, they become bullish. And in addition to that, what the envelopes also then help to create is downwards pressure, as indeed you've got here. We've moved through the VWAP. We've gone below the lower envelope, which is 1 standard deviation away. And as you can see here, it tends to act as resistance. When the price comes back to revisit, it's pressing down. Does the same thing here. It's pressing down. It's pressing down. I've moved across to the New Zealand dollar here, but it'll work on any stock, any chart, anything you choose. Now, what we've done with this is we've not just developed one indicator. This is actually 5 indicators in one. If I go up here onto the VWAP itself, what we call the VWAP Pro, just click on the settings. If I click on this drop down, you'll see that we've got 5 versions here. So why have we produced 5 versions? Well, first of all, these are all extremely popular. Traders like to use them in very different ways. And some are preferred by some traders and investors, and others are preferred by others. So we thought, to hell with it, excuse my language, we'll put all 5 of them together in one bundle. So you buy one indicator and you get all 5 together, and you choose which ones you want to use. So what are they? We've got the VWAP, which is the volume weighted average price. Now, volume weighted average price, the true version of the VWAP, starts at the new session. In other words, it resets. It's like a stop clock or a stopwatch. At every new session, it will reset and start counting again. That is the way the VWAP works. It's the way it's supposed to work. As I say, it'll depend where you're starting from, but it could start on a daily, or if it's a new session, for example, with a stock. On an index future, it'll work through, but on a stock, for example, where it stops and then restarts, it will restart at the new session. Whether you set that to the pre-market or not, or whether you set it to the physical market open, that is when your VWAP will start. We then have the AVWAP, which is an average volume weighted average price. So that works as an average of the volume itself and works across the timescales. We then have a moving volume weighted average price, which works through all the various sessions, so you don't need to reset it. Then we have a time-weighted. Now, this is the only one that doesn't use volume. It is a time-weighted average price, and it looks as averaging time over the session and delivering that on the WAP itself. And finally, at the bottom here, we have what we call an intraday VWAP. Now, the intraday VWAP is very unusual in that it works on the slower timeframes. So this is very much for the investors, where it works on the dailies, the weeklies, and the monthlies. So that's what we call the VWAP Pro, which I just wanted to introduce for you briefly there. The next indicator we've got may look very like the currency strength indicator. And indeed, it has a lot of common similarities with that in terms of interpretation. But what we've done here is develop an indicator which we call the market strength indicator. So we call them 2 sister indicators. We've now got the currency strength indicator and we have the market strength indicator. And what the market strength indicator allows us to do is and I've kept it very simple here. I've just put the 4 futures on here. I've got the YM. which is, where are we? Let's just move that up there a little bit. I've got the YM, I've got the NQ, yeah, I've got the ES is at the bottom here. Let's move that over. The YM is the pink one here. This is the NQ, and this is the Russell. So basically what you're looking at is on a 1 minute time frame, you are looking at market sentiment across the 4 futures contracts for those 4 indices. And then you're looking at them across multiple time frames. So I've got it on 5 minutes, and I've got it over here. I'll just pull that right the way over. There we go. Put it across. And I've got it on the 5 minute. Beg your pardon, that was on 3. This is on 5. So there we are. We're now up to date. This works in a very similar way to the CSI in terms of interpretation. Yep. Oh, is it? It might be carrying on. Apparently the recording stopped, but I think it does carry on. In terms of interpretation, it's very similar. We are looking at pretty much overbought, oversold. We're looking at trend strength, trend weakness. We can look at, and the beauty of this indicator, of course, is that we can apply anything we like. I've got futures here. We could be looking at stocks. So we could be looking at the relationship between stocks. If we were pairs trading or however we're approaching the market, we could be looking at the stocks relationship to the indices. We can be looking at sectors, for example. We can be looking at the SPY, because we can run ETFs on here, so we can have the SPY and related stocks. We can have the SPY and sectors. We can have any combination we like of ETFs, stocks, futures, whatever it is, we can run it on here. And you've then got an instant presentation, an intuitive presentation of what is going on in terms of strength and weakness, what is likely to be approaching a potentially oversold area, what is potentially overbought, what is trending strongly by the steepness of the line. This is all the analysis and methodology that you're so familiar with the CSI. Well, it's exactly the same here with what we call the market strength indicator as well. So I wanted to just show you that as well. Of course, we could be running currency futures on here, but then we've got the CSI. And the other nice way, and I'm going to do some videos on this as well, of course, is bringing the CSI into this mix. Is if we're running, we want to see what the dollar's doing. As Anna mentioned earlier, when dollar strength, dollar weakness, very much allied to what is going on in terms of stocks. So running the dollar alongside your stock portfolio, alongside your stock window on your chart space, absolutely fine. So you have the CSI, you've got the MSI, you've got it all here. Now those are 3 new indicators. In addition to that, just drop this out of the way. So that's on TradingView. In addition to that, I've just got this workspace up, but in addition to that, let me just tell you very quickly, because we're going to run over time fairly soon anyway, but let me just tell you very quickly. On NinjaTrader, we have also, which is where we are now, we've also ported across all the applications into Market Analyzer. So you will be able to run Market Analyzer to get a perspective on what your indicators are doing there. And that's been a huge job as well. So we brought Market Analyzer into this update of and development of new indicators also. So that is yet another development that we've been working on. And finally, just on the volume for NinjaTrader, we've also updated that. That now has 3 levels by which you've got low, medium, and high in terms of lines to give you a view on the strength of volume that is coming, and that's available just on the regular volume charts that you've got with NinjaTrader, but it will be a quantum volume indicator to update that as well. Yeah. Anna, do you want me to switch off?
Yeah.
I'm just going to switch off because Anna wants to answer a question. Hold on a minute.
We've got some gremlins on the chat side of GoToWebinar, so I'm going to answer the question on air, and it's actually a nice question and a good question. The question is, if we use VPA, which is those 5 elements, which is price, action, volume, candles, candle patterns, and support and resistance and time. Why do you have indicators? And it's because indicators are there to support the methodology. That is your foundation. That is your core. And to be honest, there are traders who just simply stay with that. They do their support and resistance themselves by eye. They draw their lines vertically, horizontally, however they choose to do so. And it's not just proprietary indicators. There are lots and lots of standard indicators that traders use, but they come second, as it were. So VPA comes first. Once you understand this relationship, once you understand what you're looking at with regard to a chart, are you in a trend? Are you in a congestion? Are you in accumulation? Are you in distribution? Across the time frames, what are you seeing across the time frames? Are you seeing consistency across the time frames? Because when you have lots of time frames up, whether 1, 2, 3, or 4, or however many time frames you like to consult, you can see completely opposite to what's going on in a 5-minute chart. It might be a trend, but it's actually counter to the cycle that is on an hourly chart. That doesn't invalidate maybe a trade that you're going to take on that faster time frame, but it's going to have an implication on the risk of that trade. But if you're scalping, if you're only going to be in there for seconds or minutes, in a way you don't really care. You're taking the opportunity of that tiny slice of that price action. But using the VPA principles, how you support those and make your life easier. Everything that we've always tried to do has been in support of volume price analysis, and also our belief of how this market actually works. I didn't mention the currency strength indicator that we also use when selecting suitable candidates for trading the pairs in the different sessions. I didn't highlight it because I wanted to focus on the charts themselves. But if we looked over to the CSI, we can see the flows going either into the dollar or out of the dollar, and you have this lovely divergence between when we had the pound and the dollar, and we had the Aussie and the dollar, and we see that in multiple time frames. So that's using the flow, if you like. That's the volume. So that's what the CSI reflects. As always, when you start, it's very easy to overcrowd your chart. I've seen charts with the chart itself, and then a whole layer after layer after layer of different indicators, and to me that seems maybe slightly overkill. There is a balance, but you start with VPA. That's what the book or my books have been about. It's just that your core methodology, your core foundation, which is the price action with the volume. And I have to say, not everyone buys into it. People who do buy into it, traders who do buy into it, they do very, very well. And if you want evidence of that, the best place is to head over to my Twitter feed. My handle is at Anna Cool, that's ANNACOULL, and I always retweet what traders tell me. There are groups out there with thousands and thousands of traders. These are Discord groups. They trade options. They trade all sorts of things. It's mainly stocks and options, and they are eternally grateful that the VPA has just transformed. It's been a real game changer. And then you add your indicators on top. Is there anything else you want to add to that, David?
No. Thanks, darling. Absolutely. And that's what I was saying about the VRSI indicator. And it's a point that I make repeatedly in the videos that I've recorded on it, that you use it in combination with our volume price analysis methodology for precisely that reason. Very quickly, just to, I pulled up this workspace because it really describes very many different things. On the right-hand side, I've got the currency array, and on the left-hand side, on these three, I've got the 135 on the currency matrix. And the reason I show this is just to reinforce the point that the currency array on the right-hand side is a much longer term perspective on what is going on. I've isolated out the dollar, as you can see, and the euro, dollar, Aussie, New Zealand pound still down at the bottom, and the inverse pairs are up near the top there. So yeah, the dollar's been, we've seen strong buying of the dollar, and that's reflected in the angle of the trend, and also the fact that they are stacked pretty much on top and bottom of the indicator itself. But remember, the currency array looks at the time horizon over a much longer period, and it's very similar to going back to the trend monitor and the trends indicators. Trends works very close to the market in terms of trend change. The trend monitor takes a much more considered view. And it's exactly the same here, because people say to us, well, why has the currency array got the majors down here and up here? And yet if I track over onto the 1 minute for the matrix and isolate out the dollar there, it's telling a slightly different story. There it's saying, well, we've seen a little bit of a reversal here. And in fact, 2 or 3 minutes ago, they were much higher up. They're starting to drop off a little bit. And all it comes back to is that the currency matrix is much more of a scalping tool, because it looks at it over I can't remember whether it's a 7 or a 14 period look back. Forgive me. It's something like, it's one or the other. I think it's 7. So it's taking a much shorter term perspective, a view on what is going on in terms of strength and weakness or reversals on those across the matrix, excuse me. Whereas on the array, it's looking at it over a much longer term perspective. So I wanted to reinforce it because it's a question we get asked a lot, and just to explain that point and to reiterate it very strongly, the matrix is used. If you're a scalping trader, then that is the tool to use. If you're a longer swing or trend trader, then it's the currency array. You can, of course, use both, because this is telling you what's going on short term. This is telling you what's going on longer term. It's as simple as that. I put this up just for interest, because it's always fascinating to look at correlations. This is set to an hour at the moment, as you can see here. And it's just interesting. We haven't got the New Zealand dollar on here. This is one from NinjaTrader. I don't know why they don't put New Zealand dollar on here, but they haven't. And it's always interesting to look at correlations, because correlations drop in and out all the time. There's another site called mataf.net. I think it is .org. Can't remember now. And it's Mataf, M-A-T-A-F. It trades under another name. It's been changed once or twice, but there you'll find lots of other correlations. But if you look across it here, you look at cable to Aussie, that's pretty good correlation. Very good with euro. Anything above 0.9 is pretty strong. It's weakening a little bit here. This was higher before. And the Aussie dollar against the euro, that's pretty good. And the inverse here, not too bad. These were up at 0.9s before. They're dropping away a little bit. But basically, you can see the correlation that goes on there. And of course, this changes all the time. And the one that everyone references all the time is euro, dollar, dollar, Swiss. Okay, well, it's not too bad. But I have to say, even that has not been correlating as strongly as it once used to. It was pretty much bang on at one point. It used to be as close to -1 as you could get, as didn't matter. But at times, it falls out of correlation. So again, correlation is something you need to be aware of. If you're trading baskets, for example, multiple baskets, we trade baskets all the time. We will tend to trade across one currency, so we'll trade a dollar basket or a pound basket, whatever it may be. So we tend not to worry about it too much. But if you're trading baskets with different currency pairs in, then you need to be aware of correlation. Okay, we run over time, so I'm going to... Yep. Oh, what was the question?
About the VWAP. Why is it necessary to use VWAP? And it was part of the question about you not using it.
The reason that VWAP is so important is because the around about 40% of algo-driven trades in the stock world are now driven by whether a stock price is at or above or below the VWAP. And that's why the VWAP indicator has such prominence. It's for that simple reason. It's 40% or more. I can dig the figures out somewhere or the other, but it's a huge percentage. Not my percentages. These percentages come from recognized hedge funds and recognized insiders who report this sort of stuff. So That is why the VWAP is such a key indicator, and it's very, very predominant in the stock world. But as I've shown you here, it works equally well on Forex as well. But I wanted to show it to you just to give you a heads up on what's coming down the stream. I'll just click that off. Sorry about that. Right, just to wrap up very quickly, where are we? Here we are. Well, this is quantum trading. If you're looking for the indicators, you'll find them over there on the 4 platforms: MT45, NinjaTrader 7.8, TradingView, and TradeStation. MT45 is one license. You choose which platform you want to trade on. Exactly the same with 7 and 8. You choose to run either 7 or version 8. And if you've bought any indicators from us in the past and you want to upgrade, then we will always give you a credit. So if you've bought, doesn't matter when you bought in the last 11, 12 years, whenever it was, we will have you on the system somewhere. And if you want to upgrade to another package, or if you want to upgrade to the education program, then we're more than happy to arrange that for you, so you never lose out. And can I also say to all of those I mentioned earlier on, if you have the full package for NinjaTrader or TradingView or indeed TradeStation, you will get those indicators free of charge. And for NinjaTrader, that will include the Market Analyzer group as well. This is the education site. You've got the Forex program itself, which is hugely successful, massively comprehensive. That took us 2 years to put together. It's taken us practically 2 years to put the stock trading and investing program together. And I guess that speaks more than anything else of what Anna and I try and do, whatever we try and do in terms of delivery, whether it's education or whether it's indicators, is we try and give you the absolute maximum. We give you our 25 years experience of trading and investing, and we try and package it all together. It does mean that these are hugely comprehensive programs, and it will take you time to get through it, but we would rather do that than provide something which is thin in content, which these are certainly not. They are massive, and they take weeks, if not months, for most people to get through, and sometimes longer than that, because there's a huge amount of content, because it's what we believe you need to know in order to be successful. That's what we put into these programs. The funded program has been hugely successful as well. It is only available to students once you're on the program. You can sign up for the funded program whenever you wish. It's basically you are trading your money, as it says here. Why risk your money when you can use ours, which is really all you need to know. We give you the money that you asked for in the comparative terms. At any rate, we don't. It's not an unlimited budget, but you start off with your choice of level funded program. You can start with $5,000, $10,000, or $15,000. The choice is yours. You pay this one-off entry fee. You can look at it as an entry fee or a ticket of entry, whatever you wish to call it. That's what it is. We then give you this money in return in a funded account, and you start trading. If you start at the 15,000 level, we set a level in terms of target levels to achieve. Once you achieve that level, let's click that off. Once you achieve that level, we then multiply the money by 4 times, so you move up to 60,000 and on up to 2 million. Goes 60, 120, 240, 480, on up the tube, right the way up to 2 million. And throughout that period, you will be earning. We give you a percentage rate back of the profits you make as you work your way through the program, so it's a win-win. As I say, you just move yourself up through the program, and the risk is all ours. It's not yours. It's our money. You start off with the Forex pairs as the initials. That's all we allow you to trade on the initial. And then as you move up into what we call the portfolio manager levels, you can trade gold and you can trade indices as well. But at the base level, you can only trade the 28 currency pairs. Yes, it will be recorded, this webinar, and it will be up on YouTube at some point. Can't tell you when, but it will be within the next few days. So yes, they are recorded. Finally, just on Anna's site, this is where you'll find Anna, all the books up there, which again have been massively successful. And they're all there in either Kindles or in paperbacks, and you've got all the blog post analysis that Anna does. And also, as Anna mentioned earlier, don't know where our Twitter and Facebook's gone, normally on there, probably a problem. But you can follow Anna on Twitter and on Facebook as well. She's got something like getting on to 40,000 followers on Twitter, and hugely humbling comments both on the books and also on Twitter as well. And it's just a delight. And I can't tell you the pleasure that it gives us when we see people being successful through what they've learned. It's just, I can't tell you how good that feels. So that's it. I think we're done. Thank you so much for coming along today. Hope you've enjoyed it. Hope you've learned something new. We will be back at 8 p.m. London time in about 6 hours time. Yeah, something like that. So we will, if you're back then, look forward to seeing you then. If not, enjoy the rest of the week. Have a great weekend and see you soon. Bye for now.